Hello everyone and welcome to my morning report analysis videos on Wednesday the 29th of March with me, Rich Perry, market analyst at Handtech Markets. Today's the day that UK is going to trigger Article 50, which sort of formally sets out its divorce proceedings from the European Union. Now, we have seen sterling under a little bit of pressure early doors today. It sold off quite strongly yesterday and that sell-off has continued today. That sort of come amidst also comments from Ian McCafferty, of the Bank of England Monetary Policy Committee, that suggested that the UK wasn't, or he was unwilling to, or unlikely to sort of move towards voting for a rate hike, and he was been the member of the MPC most likely to join Christian Forbes in voting for rate hikes. So that sort of hit sterling a little bit, and it's continued lower today. But generally speaking, the dollar has been strengthening as well. This is coming after or basically from yesterday afternoon. We had a really strong consumer confidence number. There was I think 125 on the consumer confidence there or thereabouts, which was the strongest reading since December 2000, so really strong number there on consumer confidence. That helped to strengthen the dollar, and also comments from Fed members as well. Stanley Fischer sort of pointing towards another 2 rate hikes this year helped to stabilise the dollar sentiment, and generally speaking it seems as though that the market has turned a bit of a corner with the dollar with this move rallying higher. You've got the Treasury yields, which also picked up quite strongly yesterday, 10-year and also the 2-year, although the 2-year is slightly lower today. Certainly there has been a bit of a turnaround in sentiment. You also saw equities in the States picking up sharply. Stocks on Wall Street have been rallying since sort of a couple of days really, but certainly yesterday was a strong move to the upside on the S&P 500. That helped to sort of pull a bit of gains through the European markets today. The DAX has broken out, so really strong run higher we're seeing on the DAX. So very interesting moves is what we are seeing. Now, in terms of what we've got to look forward to today, basically just pending home sales and the oil inventories. So first of all, pending home sales expected a growth of 2.4%, and then the oil inventories will drive the volatility through the oil price. Again, another inventory build on the crude oil stocks expected. What was that? 11 out of the past 12 weeks of crude oil inventory build. But you sort of balance that to a certain extent with the distillates and the gasoline stocks, which are expected to continue to fall. So expect a bit of volatility around those EIA numbers today, because that tends to be seen. But that sort of takes me on to my chart of the day. Chart of the day, which is the Aussie dollar. Now the Aussie dollar has, Euro Aussie, I should say. Now the Aussie has been sort of Euro Aussie has been gaining ground within this downtrend channel, but again rolling over at the key level. Now that key level, near term, certainly throughout 2017, that resistance came in around 143. Not only that, the falling 144-day moving average has been a basis of resistance again, which is tracking that trend line lower, and we've seen a little bit of a top out in the hourly chart, where you can see the move below that initial support of 42.15, but other supports have also been breached. That 141.50 pivot, old resistance, became support, but that is again becoming resistance, and again this morning it's falling away. Now you can see this 140.70 level on the daily chart, generally speaking, was a floor throughout the late 2017 months, has now become a basis of support, and again we're sort of hitting that level today. So that is a key level near term. If you break that, then you're sort of looking at sort of moving back towards the sort of lows of mid-March, which is 138.70 area, which again is a bit of a near-term pivot. And you can see on this hourly chart that 140.50 was a basis of support on the 22nd of March, and again that is an interesting level to watch. But you look at the momentum indicators, you'd certainly say that they're more bearishly configured now. Throughout this rally higher, the MACD lines were solidly strong, and the RSI was solidly above 45. But but now that's turned a corner, and you see the MACD lines negatively configured, RSI sort of struggling, and I think any rallies are now going to be seen as a chance to sell, because as I said, this downtrend channel seems to be continuing, doesn't it? So a move below 140.70 today would open 38.70, but certainly I think there has been another corner turned in this Euro Aussie chart, trend line lower. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.